Can you all see the board? Can you all see the question paper? Can you all see the paper?
Yes.
All right. Okay, so we did question 1 yesterday, which we were basing it on the trade receivables control account, where we were doing a T account on how to post transactions and also how to work on the additional information that they gave us, and also what is an overcast and an undercast, and how do you rectify some errors, and also the effect of a trade receivables ledger and how it does not affect the trade receivables account when we are dealing with it, if they tell you that everything was accounted for. And then we went on to do the asset realization, whereby we sell an asset and we need to figure out, did we make a profit from selling this asset or did we make a loss? And by doing so, we need to remove that cost price of that asset from the asset account and moving it to the asset realization account, and also removing the accumulated depreciation of that asset from the depreciation and accumulated to the asset realization. And then afterwards, you get to account for to see, how did we sell this asset? Was it a trade-in, or did we actually sell it? In most cases, they will tell you that it was a trade-in, whereby now you need to find the difference between the asset price and how much you are now owing for the new asset, and then the difference will be your the price that they bought that asset from you. Do you all understand that one? Okay, so now we proceed to question 3, at which question 3 says, Peter, a qualified electrical engineer, was retrenched in January 2022 and he received a retrenchment package of 1 million rand. He decided to open his own business, PG Electricians, on 1 February and deposited 50% of his retrenchment package into PG Electricians business bank account. PG Electricians will also do installments of solar panels. PG Electricians will use the periodic inventory system. Hey, I want to ask, which companies are those that you get retrenched and they give you 1 million? I think I also need to go find a job there. At least I know I'm covered once they retrench me or I retire.
You must listen to Madlanga Commission.
Yeah, hey, it's a lot of money. All right. And then it goes on to say, the following transactions occurred in the books of PG Electricians during the month of February 2022. So we have the first transaction, which says he decided to open his own business, PG Electricians, on 1 February 2022 and deposited 50% of his retrenchment package into PG Electricians business bank account. So which means he deposited 50% of 1 million, which is what? 500,000. And then number 2 says, Peter will be renting a business premises at 3,800 per month. Number 3 says, for the month of October, PG Electricians rendered service for cash of 10,000 Rand. And then number 4 says, PG Electricians bought a van on credit from WR Cars on 10 February 2022 for 50,000. Finance was obtained through a loan from ABC Bank and carries interest at 11.5% interest per annum. And then number 5 says, PG Electricians employed 3 staff members, 1 receptionist and 2 electricians. The receptionist salary will be 12,000 a month, and the 2 electricians' wages will be 3.5 per month per week. The electricians worked for 4 weeks, and were paid in cash on 28 February 2022. And then number 6 goes on to say PG electricians sold 6 solar panels, 1 battery, and 1 inverter for 65,000 on credit. The items were delivered to Mr. Kumalo's home on 28 February 2022. So now we have our instructions, and then they gave us a general ledger and an accounting equation at which they're saying the correct ledger and accounting analysis of transaction number 6 in the books of PG electricians for the sale to Mr. Kumalo will be. So we go to our number 6 and let's find out what is it saying. So it's saying PG electricians sold 6 solar panels, 1 battery, and 1 inverter for 65,000 on credit. The items were delivered to Mr. Kumalo's home on 28 February 2022. So this affects our what? Status control, right? Which is also affecting also trade receivables account. Do we all agree? Because we sold these products on credit. So which means our sales is increasing, which is also part of our trade receivables account because we sold these goods on credit. So now they want you to find out which account do you debit and which account do you credit when such a transaction occurs. And if you find those two accounts, how are they being affected? Is it an asset? Is it an equity? Or is it a liability? So first things first, we had a client, Mr. Kumalo. We had a client, Mr. Kumalo, who we sold goods on credit. So which means there are two transactions that are being affected. Namely, there was no sales, but because we sold these goods to Mr. Kumalo, now sales is what? Increased. And then the other thing is, how did we sell this product? We sold it on credit, so which means we have trade and other what? Trade payables, trade receivables. Because we sold it on credit. Do we all agree? Or are we all moving together?
Yes.
Right. So we know that trade receivables account is a asset account, and we know asset accounts increase on the debit side. So which means by us selling those goods on credit, automatically trade receivables account is also being affected. So you would debit your trade receivables account. And what happened? We had a sale, and you know that sales are an income, and all incomes increase on the credit side. Then you credit your what? Your sales. What's happening to assets? Remember, we had 0 trade receivables. When Mr. Kumalo bought these goods, we had our trade receivables is now 65,000, which means what happened to trade receivables? It increased, right? So if it increased, which means on asset, we will record plus 65,000. Do we all agree? Okay. So now our assets is increased by 65,000. And then the other thing that is being affected, which we credited, was sales. And you know that sales is an income account, and all incomes increase on the credit side. So which means on equity, sales is also increasing by how much? By 65,000. Liabilities, there's nothing that's affecting liabilities because we didn't buy anything on credit. There is no creditor involved, or there's no a supplier that we bought goods from on credit, but it's actually a debtor that bought from us on credit. So which means on liabilities is going to be 0. That's how you answer this question. And then you get your easy 5 marks. Do you have any questions, or is there someone who is a bit confused or who wants to add? Are we moving together? Okay. If there are no questions, then we proceed to number 4. Just do this so that I can see where is it. Okay, here it is. Okay. So question 4 is out of 7 marks, and it says PLI Traders is a registered VAT vendor and applies the principles of the perpetual inventory system. All inventory is sold at a constant markup of 50% on cost. List of balances in the books of PLI Traders as at 31 January 2022. So we have Nazmira wholesalers with a balance of 3,550. And then we have manual dealers with a balance of 6,465. And then it goes on to say the bookkeeper of PLI Traders requested your assistant recording the transaction in the following subsidiary journal. The following transactions, inclusive of 15% of VAT, took place on 3 February 2022. So we have Nazmira wholesalers deposited 2,750 into PLI Traders bank account in full settlement of his account. And then the second one says we made an EFT payment to manual dealers of 5,665 in full settlement of the account. And then you are required to record the transactions provided above in the applicable subsidiary journal of PLI Traders. So here the tricky part is they give you both a debtor and a creditor. And then they want you to do the cash payment journal, at which if you get confused, you will take a data and recording that amount in a cash payment journal, at which you get 0 marks because the data is someone who's actually owing us. So these are the tricky questions that they'll always use, and you need to be careful and know the difference between is the client a supplier or is the client a debtor? So since you are dealing with a cash payment journal, it means we are the ones that were owing a company something and we paid something. So on the additional information that they give you, you're supposed to check, okay, which transaction on or which account or business shows that it was us buying goods on credit and now we are paying something. Do you understand? Do we all understand? Okay, so now we have our cash payments. Let's figure out. The first one says Nasmira also, okay, before I proceed, which one do you think is a debtor and which one is a creditor? From the 2 examples that they gave us, which one is someone owing us and which one is the one that we're owing a company?
I think Nazrima is the one that is owing us. And then we are owing manual dealers?
Yes, that is correct. Because in Asmira, they told us that he deposited 2,750 directly into PLI Traders bank account, at which we are PLI Traders bank account. So which means this one is a CRJ, and then the other one is the CPJ. So which means this is the one that we need to record. So as we record, our cash payments journal, it is day details bank, and then here's analysis of receipt. And then here it's going to be purchase is, let me just quickly see. Because this one I think it's going to be sundry account, and then This one is going to be VAT. And then I think this should be trade payables. So on details, we need to record which company are we paying to, at which they told us that it's manual dealers. So you come on additional on details, you record manual traders, manual dealers, I mean. And then on bank, how much did we pay? It said made an EFT payment to manual dealers for 5,665. So which means here it's going to be 5,665. Do you all see that? I think here it's going in my, I think it's supposed to be settlement discount received. I think it's supposed to be discount received. So and then on analysis, you will still record the 5,665. And then on VAT, you need to find out, is it a VAT input or is it a VAT output? Remember from what I told you about VAT, that if it's VAT out, it's us selling. And then if it's VAT in, it's us buying. At which on this transaction, it was us who bought. So which means it's a VAT input. And then the other thing that you need to always make sure, when they tell you that we paid, for example, I think someone wants to join the class. Okay. There we go. Okay. One thing that you always need to make sure and not be confused, if ever they told you, for example, here they told you that made an EFT payment to manual dealers for 5,665 in full settlement of the account, but we were owing manual dealers 6,465, which means you need to subtract, and the difference that you will get here, it will be the discount that they gave us, which is a discount received. Do you understand? Once you get that discount received, how much do you get if you say 6,465 minus 5,665? How much are you getting? How much are you getting? Okay. Is everyone here? Can you guys hear me?
Good evening. Yes, and
Good
apologies
evening. How are you?
for running late. I'm good. How are you?
I'm good, thank you. All right. No, we're just doing question 4. We did 3. I'll just send you the recording so that you can watch for 3 and then we can proceed on the others. So here we're dealing with a cash payment journal, at which I was saying that whenever they give you such a question, you always need to be sure first on which one is a cash payment journal or which one is a cash receipts. Because what they can do is they can ask you to draft a cash receipts journal. So from these 2 transactions that they gave you, you need to be able to see which account is which and which one is a cash payment, which one is a cash receipts, which one are we receiving money and which one are we paying out. Once you have that drafted out, it becomes easy for you to know if they give you a cash payment, you know, okay, it's us having to pay someone. And if it's a cash receipt, you know it's us receiving money from someone. So I was talking about VAT, that they will tell you, for example, the one that we're dealing with, that we paid 5,665 in full payment of our account, but we were actually owing manual dealers 6,465, which means the difference that we get, which is 800, was the discount received that we got. But remember, we are the ones that have to now pay for this discount received. So which means instead of us, the normal transaction on the normal account when you're dealing with a cash payment, it's always VAT input. But now it's a tricky part because we have a discount received, at which if we receive a discount, we automatically becomes the opposite of the VAT that we had. So if it was a VAT input, it becomes a VAT out. If it was a VAT out, it becomes a VAT in. Do you understand? Do we all understand? Okay. So by saying that, which means on this 800 that they gave us, and they told you that all accounts are what? Are VAT inclusive, which means this 800 Rand is VAT inclusive. So which means it's what? 115%. And we need to find out what is the VAT. So in order for you to find the VAT, you will say 800 times what we are looking for. We are looking for what? 15%. And what we have is what? 115. So if you punch that in your calculator, let's see, 15 over 115. I am getting 104.35 cents. Is everyone getting the same thing? I round it off because it's 104.3477 is above 5. So you round it off to 35. Are we all getting the same answer? Are we all getting the same answer? Hey, why is him alone? Where is everyone?
I think you don't see the reactions. Everyone is doing a thumbs up. So I don't know.
Oh, yeah, because I can't see them on the screen. I think that's why. All right, no problem. So which means that from here, our VAT is going to change from VAT in to VAT out, which means comma up to remind should be 695.65 cents. So which means that will be your what? Your discount received. That will be your discount received. Meaning to say that that's the amount that you record as your discount received. 695.65. The reason being is because when it comes to us receiving a discount, it changes everything from a normal transaction whereby we know if we sell a product or we buy a product on credit, it's VAT input that is being affected. So we need to record it on the purchases and also accounting for it in the trade payables account. But now if we get a discount, we need to account for that discount because we are the ones who has to pay for the VAT. Because if a company gives us a discount, which means we are the ones that get to account for the VAT of that discount that we got. So that's why it actually changes when you get a discount. And then the last part will be your trade payables. And then you rate the 5665. Do you all understand?
Yes.
All right. Okay, so that's how you answer question 4. And we can proceed to question number 5. Okay, which question number 5 is out of 5 marks. And it says, Alva Traders is a registered VAT vendor and applies the principles of the periodic inventory system. All inventory is sold at a constant markup of, yes, yes, sir.
I just want to find out, had we not had a discount, were we going to calculate that on the on that 5665 amount? Or is I'm getting confused between
Yes, we're going to.
okay.
Okay, now I understand. Yes, if there was no discount, what we're going to do, we're going to calculate VAT from the 5665. And then the VAT that we will get was the one that will record on VAT, but it also won't be a VAT out, it will become a what? So we're going to get your VAT from this 556 from the 5665, and then you record it on your, and there won't be any discount received or discount granted, to be 0. But because we had a discount, that's why it's now the opposite. But if we don't have a discount, you record it on a normal transaction that you record. You record the amount, you calculate the VAT of that amount, you record it, and then you record your trade payables account. Because remember, trade payables is the amount including VAT. And then your purchases is the amount excluding VAT. So all purchases, it will be excluding, and then if it's a trade payables, it will be including VAT. Are you answered, sir?
Okay, sure.
All right. Okay, then we can proceed. So they told us that there is Alva Traders, which is a registered VAT vendor, and it applies the periodic inventory system. All inventory sold at a constant markup of 40% on cost. The bookkeeper of Alva Traders requested your assistance in recording the correct transactions in the purchases returns journal. The following transactions, inclusive of 15% VAT, took place on 20 February. So we received damage to goods previously sold on credit to Mr. Botha and issued credit note number 253 for 2,510. And then goods purchased from Nawawi stores were returned due to being faulty and issued debit note number 250 for 1,750. Record the transaction in the applicable purchases returns journal of Alva Traders for February 2025. Okay, yesterday I explained to you the difference between a debit note and a credit note. And here they're asking us to record the purchases returns journal. Which one do you think is a purchases returns from the additional information that they gave us from these two transactions? Which one is a purchases returns, where we are the ones that returned goods? Okay. No one wants to give it a try. All right. So if we're dealing with the purchases returns journal, it's us returning goods that we bought on credit or we had previously bought on credit. So from the two, if we receive damaged goods previously sold on credit to Mr. Botha, this one is a sales returns, because it also goes on to tell you that Mr. Botha and issued credit note number 253. A client sends the damaged goods with a debit note, and then if we are in agreement to that or to those damaged goods, and that it was something that either or that was of end money back with a credit note, in which a credit note is an agreement to the debit note to say, we have received the damaged goods that you sent us, and yes, it may be a fault, so we agree to everything that's happening. If it's either the client wants a refund or they want us to exchange or so forth, we, as we send the credit note, we are telling them that we agree to the goods that they sent to us. And then the other one, they told you that goods purchased from Nawawi stores were returned due to being faulty and issued debit note. As you can see here, we bought the goods and we found out that they were faulty. We sent them with a debit note showing that we have received the goods that we bought on credit, but they were not working or they were faulty as they told you. And then when Nawawi receive those damaged goods or the faulty goods, and then if they're in agreement, they will send us a credit note. So which means this is the account that we're dealing with, the ones which says goods purchased, because it's the one that affects your purchases returns journal. And they told you it's document number 250. So you come to your purchases journal, purchases returns journal, you record document number 250, details the account, it's Nawawi stores. VAT, it will be VAT input because it's purchases. And then here you have your purchases. And then here you have your trade payables. So purchases, as I told you, it's the amount excluding VAT. But they also told you that the transactions below are inclusive of VAT. So now you need to calculate how much VAT is in 1,750. So you say 1750 times 15 over 115. How much do you get? I'm getting, yes?
228.
228.26.
Yeah.
Okay, so it means this will be our VAT that we will record here, 228.26. And then to get your purchases, obviously trade payables, you will record the 1750 as it is. And then to get your purchases, you returns, it will be 1750 minus 228.26. 1750 minus 228.26.
Mm, 1521.74.
1521.74, which means that will be your purchases returns amount. So this amount is the one excluding VAT, and then this one is including VAT. So we are subtracting from how much ever we bought those goods for. We need to subtract this 175450 because we returned the goods. And as we returned the goods, they also affect the reduction of our purchases. Because if in our account we had purchases of 5,000, it's not decreasing. So we also need to rectify that as well. Is there anyone with a question regarding this one? You see, it's just easy marks. marks that you can just get in the exam and get 100% fast.
Are we not supposed to be having
Yes, sir.
that? Is it not output?
No, it's
Then
in. Yes.
Because is purchases returns. We are returning the.
Yes. Okay. Okay. When you're dealing with a VAT input, remember, VAT input, isn't it? It is a debit balance. So let's say on all the purchases that we bought, the VAT is on the debit side, right? And then we get to return goods for a certain amount, which means here it's in addition to the goods that we bought, and then the VAT is the VAT is inclusive of this. But then if we return goods, which means this VAT is also being affected as it's what? Reducing. Do you see that? It's the same example. Let's say maybe we have a bank account, and then in our bank account we had 500 Rand, and then we get to take out 200 Rand, which means when you take out, we're doing the opposite to find out how much are we remaining with, which will be your 300 Rand. Do you see that?
Okay, let's say I'm purchasing something for 200 Rand.
Yes.
And then I have to claim VAT on the 200 Rand. Then
Yes.
I record this VAT as VAT input.
Yes.
Because it's money that I'm going to go to claim at SARS.
Yes.
Now in my books now I have an additional asset. When I return this, am I not supposed to minus the VAT that it's no longer money that I'm going to collect now, because is it not the opposite now because of this transaction?
It's not the opposite, because remember, I'll give you this example as I gave you. Yes, you are right that it's some money that you're supposed to go claim. But remember, you have your VAT, right? Input. At which, let me say, for example, you have that 500 Rand that you said. And then we have your VAT in output, which is dealing with you selling goods on credit or cash, whatsoever the reason is. So if I bought goods on credit and then I wrote the transaction in the VAT input or accounted the VAT input, and then I get to return goods, is it VAT output being affected, or is it VAT in that I just have to simply subtract the goods that I sent back?
Okay, now I get you. Thanks.
You now get it. But if it was a sales, obviously VAT output is on the credit, and then we get to return, we were going to debit it. Do you understand?
Yes.
Yes, it only gets to be the opposite account when we have a settlement discount either received or granted. That gets to change, because remember, if let's say for example if we did not return anything but we actually received a discount, that discount we had to record it in our VAT output, because now we are the ones responsible to pay that VAT. So that's why it jumps to the other opposite account. Even if it was a sales and then you gave it a discount, now the company itself is the one that will be responsible of paying for that VAT. So that's why it jumps from out to in. Do you now understand?
Yes.
Right. So these are simple terms. You must always know them and don't get confused. Just always know if the transaction that you're dealing with is not having a discount or anything like that, we record it the normal way as we're supposed to record it. It's just a normal transaction. But if they tell you about a discount granted or received, that's when you know that it needs to change. Because why? We need to now focus on that discount. And then on that discount, it will be VAT inclusive, which means we need to find out how much is the VAT on that discount that we got. Let's say, for example, you went to buy goods on credit, maybe let's say you want to buy something on macro, and then it was, let me say 500 rand. But then, I don't know if this example is going to make sense, but let me try. But then macro says, from what you bought, we are going to, I think it's not going to work. Or let me say maybe if a friend borrows a car. When they borrow you a car, they will tell you that they're going to pay for the monthly installments of that car. And then they get to say, but the fuel you have to pay for yourself. So I think it's just one and the same thing, that you get to be given a car, and then the person says they'll pay. If it's a monthly installment car, they get to pay their monthly installment, and then they say you just have to pay for the fuel. So which means that fuel is the VAT that you're now paying for, is the opposite of it. To say we received a discount, but on that receiving of a discount, there was VAT, which means that kind account or client is now the one responsible of paying that VAT discount that they gave us. You understand? Or I didn't confuse you?
No,
Okay, perfect. Okay, so we're done with that one, and then we can proceed to our last question, which is question number 6, at which it says, use the information provided below to calculate the cost of sales. And then they gave you the opening inventory, purchases, settlement of discount granted, import duties, sales, returns, and closing inventory. One thing I want to tell you is that if ever you're to see such a question, just know that the account or company that we are dealing with is, or it has a periodic inventory system. Because remember, the periodic inventory system, as I told you, you only get to account for cost at the, because the perpetual, it is computerized, which means the same time you enter in transaction, it calculates your cost of sales. You don't have to calculate it manually. But if it's periodic, that's your spaza shops, they cannot, after a transaction, sit down and say, how much did you buy this product that we sold from this person, and how much profit did we make? But they can only do it at the end of the financial period, or at the end of the month, or end of their financial, let me say period. And then they get to see, okay, we sold this much goods, we bought this much, we had an opening inventory of this much. Now let's calculate how much are we now left with. And then they do that physical stock count. They now count to say, okay, at the beginning of the year, we had 500 chocolates. Now we are closing off our financial statements. How much are we remaining with? They do a physical count. They get to see that they have 40. From that 40, they now say, okay, so which means we sold 660. I mean, sorry, 460. And then on that 460, what was the cost price that we bought it for? Now they get to calculate manually. So it's the same thing that you have here to say, if ever you see such a transaction, just know that the company deals with periodic inventory system. So to calculate your cost of sales, the formula is opening inventory. You have your opening inventory plus purchases. Plus your purchases, and then if you have purchases returns, you less it from your purchases. If maybe we returned goods throughout the year, you subtract it. And then after, you will now say plus your duties, your import duties. Also plus your, so it's import duties, and the other one is, there's another one that they like to bring as well. Freight charges. So you add your freight charges, and then after that, you now say minus your closing inventory. And then the total that you get from all these will be your cost of sales. So now let's go to our table. We have an opening inventory of 160. So you now say 160,000 plus, they told you the purchases as well. So you now say plus 240,000. And then from here, you can see that you don't have any purchases. And the other thing that I forgot, you need to also account for settlement of discount received. You subtract it from purchases because it lessens your purchases amount. Let's say, for example, you bought goods on credit for 6,000 and then you got a discount of 500, which means you didn't pay 6,000, but you now ended up paying what? 5.5. So you need to account for that. So you say settlement of discount received because we're the ones receiving the discount. But if you don't have it, you continue. As here you can see in the transaction, we don't have any purchases returns, and then we also don't have any settlement of discount received. So you say 160,000 plus your 240,000, and then we also see that we have import duties. You add it as well, plus 42,000. And then we have nothing else but closing inventory. Then you less the closing inventory, which is 330,000. And then when you account for these transactions, you get your cost of sales. So it's 160,000 plus 240,000 plus 42,000 minus 330,000. It will give you the cost of sales of this transaction. How much do you get?
We don't account for sales returns.
No, we don't, because remember, we're dealing with cost of sales. When you're dealing with your purchases and trying to get cost of sales, we're not dealing with sales itself, but we want to calculate the cost of sales. So it doesn't affect, unless if the question says, what is the gross profit? If they asked you what is the gross profit, you still do the same transaction that we did. You find your cost of sales. When you find your cost of sales, now you say, they'll give you sales. From that sales, you now say sales minus sales returns minus settlement of discount granted, and then you get your sales. Once you get your actual sales, then you less them with that cost of sales that you calculated here, and then you get your gross profit. But because you are looking for cost of sales, sales returns does not affect the transaction that we're dealing with. Do you understand?
No.
You're right now, sir?
Yes, thanks.
All right. So how much do you get if you punch that in your calculator?
$112,000.
112,000. Okay, so which means this is your cost of sales. Easy 2 marks. The quietness that you guys have. Are we moving together?
Yes.
Okay, I just need to make
Sure.
sure. Okay, so before we close the class, is there anyone who wants to ask a question or add something or want some clarity somewhere? Or are we all good?